Hello, ladies and gentlemen. Marty Errico here, proud to announce from TradersAudio.com now. With Crude Squawk now merging here with Traders Audio, we are now TradersAudio.com. So again, ladies and gentlemen, here, Marty Errico, TradersAudio.com, coming to you guys live from the NYMEX again with recapping our energy pit trade today. So in Crude here today, we've seen a high at 94.61 and a low down at 93.61, a full dollar range here. We closed and settled the day at 93.82, again near our lows. So in the Crude here, in the overnight session, we ran up and we actually hit off the 94.70 level. Again, real quickly, just pulling up the chart as we looked at just, I haven't changed this chart, guys. Again, looking at the chart that we looked at a couple days ago that we told you guys about possibly once we broke above the 93.5, closed and settled above it, we can see that $94 handle. Well, we did see it today, and if you look very closely here with these fib levels, again, we on this continuous contract, we finally broke out of the 23 6 level, that 99.5 level, finally broke out of it and now hit our first negative retracement, the 38.2 negative retracement here on the fibs. So what does that tell us here? Really, it tells us that that's kind of hitting our profit target, so to speak, and now starting to come back down into the range. And we saw some short covering throughout the day, as you can obviously see on the pit chart here. So again, a little bit of covering came in today. Now we closed and settled right here at 93.80. What's next? Really, we're going to have to really kind of get it closed and settle above the 94.81 next, just to get a little bit of a breakout up to about the 95.30 area, 95.25 area. And we would need a close and settle above the 95.30, and then we can finally tell you that we can possibly go up to the $97, $98 level. But again, to be very clear here, we need to close and settle above the 94.81. So, how can we get there? I think we need some volatility, guys, and we all know that volatility has been and continue to be just taking it on the chin here the last couple days, with the OVX down in the $24 handle and implied vol about 21%. So I had someone ask me today, why are we seeing this volatility really going nowhere? Well, the OVX is an outlook of 30 days, the next 30 days, and really a lot of obviously big players and institutions don't see much action happening in the next 30 days because of our debates happening in Washington again, and that's not in 30 days, that's in February or March. So again, really have to kind of look out into the future just a bit as we trade these futures. We have to kind of see, hey, you know, is this movement going to happen now, or is it going to happen a month or two down the road? We're still getting nice movement here due to some geopolitical news, obviously. So that's really going to be our only variable move in this market here, are just news events, with some nice news on the table tomorrow, and obviously always watching the breaking news as we do best. But really, that's what we're looking at in Crude. But just to really recap, again, really lack of movement, lack of participation. We haven't really seen more than a 20-cent move from prior days settle this whole week except today. Again, volatility is still just sitting at 21%, and that $24 handle, with most of our big players there in the pit really kind of waiting on the sidelines due to all this uncertainty, and until we can get that debt ceiling all resolved. So again, that's really the kind of sentiment that's happening on the trading floor, which I'm just bringing to you guys here. Again, in the pit, we saw about 550 Feb 95 puts trade. We have the Feb 94.5 put also trade. We have actually that big call spread that we were talking about, the 90 to 95 call spread that was traded. That infamous buyer rolling some of his positions into the March contract today. Rather expensive trade, but he's rolling them anyway, as we are partially in the money really for that call spread. So again, him being interested in those 95 calls, which he can sell in that call spread. So that's the whole reason why I believe he rolled those positions. Downside exposure, we see the 89.5 put trade about 350 times, and also the 90 put trade about 500 times. So again, just some downside assurance there. Again, probably just a large local and some institutions massaging some risk around. Real quickly now, just recapping here our RBOB and Crude, RBOB and heating oil, which trade also at Crude. Again, we saw a high up at 281.61, saw a low down at 278.58, and we closed and settled the day near the lows at 279.25. Real quickly, just saying the levels here for the heating oil. We saw a high up at 311.26, a low down at 304.95, and we closed and settled the day at 305.56. Real quickly, taking a quick look here at our natural gas chart, we did have a inventory out today with a greater than expected draw, causing the market to catch a bit of a bid, but we still have these weather forecasts here that are giving us that mixed correlation of just warmer than expected weather. So in next week's inventory, we can probably expect a little bit of a build, but in the natural gas, catching a nice bid today with nice volatility here. We had a high up at 32.11, a low down at 31.28, and we closed and settled the day near the highs at 31.19.4. Oh, sorry, that's 31.94. Sorry, 319.4. So again, ladies and gentlemen, just a decent day in the natural gas. Going to keep an eye here on those weather forecasts, and obviously our key levels here again, 315. 305, major levels of downside support, as we can just kind of see us trade within the range and possibly get down to the low threes here if we break those levels. Again, this is Marty Errico, TradersAudio.com, coming to you live from the Energy Pits. Please come join us tomorrow, 8:50 in the morning, and we will see you then. Have a wonderful evening.